Hello, everybody, and welcome to the February edition. Just February, isn't it? Yes, the February edition of the Bristol Break-up Club. We're a small, welcoming club set up by me with Stowe Family Law to provide group support for anybody who's going through a breakup or a divorce in a safe and friendly environment with other people who are going through the same experience. So thank you all for coming along today. Just by way of introductions, my name's Claire Macklin. I'm a specialist breakup and divorce coach here near Bristol, and I support my clients through the emotional ups and downs of breakup and divorce. I'm a qualified coach, and I'm also a single parent to two teenagers. Stowe Family Law are the largest specialist family law firm in the UK, with offices all over the country. And they work really hard to provide the best service possible for their clients. And they collaborate with all kinds of other professionals, like myself and like Stephanie, who's here with us today, to meet the bespoke needs of each client. And we're represented here by Stowe Family Law, represented today by Abigail James and Joanna Newton. Stephanie Beddis is the owner of Kilsaran Financial Planning, and she has over 20 years experience in financial services, and she works with clients through divorce to help them make the right financial decisions for their future, including pensions, investments, mortgages, family protection. And she's come to talk to us today about planning considerations, financial planning considerations through divorce and separation. I know that from speaking to many of my clients, that's one of the big areas of uncertainty and that people are scared of when they're going through a divorce. So it's going to be really useful, I think, to get lots of information from Stephanie today. So Steph, I'll hand over to you to introduce yourself, if that's okay. And keep going.
Thank you. So good evening, everybody, and thank you to Claire for the intro, and delighted to be here this evening. Just to give you a bit of further information, as Claire's already said, I've been in financial services over 20 years now. I'm actually a chartered financial planner. So, you know, running my own business was really important for me. 7 years I've been doing that, and I haven't looked back. What you can see from the agenda tonight, we're going to cover quite a wide range of areas. Now, some of these areas you might need to speak to a estate planning solicitor or maybe a tax advisor. The main areas, as Claire said, that I cover are around pensions, investments, and also protection planning. And as Claire said, I work with individuals going through divorce and helping them plan their financial future. And we factored in some time for any questions that people have as we go through the session. I've done a little Q&A at the end of each one.
Just to add, Steph, if people have questions as we go through, please do pop them in the Q&A or the chat at the bottom. So that we can make sure that we cover everything. Sorry, Steph.
Perfect. Okay. So each and every one of you will be in a different position that is bespoke to you. So some of you may be thinking about separating, some of you will actually be going through the actual divorce process, or maybe you're in a position where you're actually considering a financial statement, or not statement, settlement. So each and every one of those, you know, you're going to have to get different considerations and goals. And so as we go through the presentation, maybe have a think about the areas that you are at currently. Some of these will be applicable to you now, but also maybe applicable to you in the future. So having some knowledge of each one of the areas would be really beneficial. And from my viewpoint, it would be amazing if you could come away from tonight's session and take away maybe 1 or 2 nuggets that would help you individually plan for your journey. So the first area we're going to have a look at is estate planning and protection. Now, both of these, I believe, are the foundations of financial planning, and they are areas that are regularly overlooked when we considered as part of a plan. So, as I said, estate planning is where we're going to start off with, and it really is important for everybody, and that is no matter what age or what your wealth is. Now, there's quite a few things to cover off on this slide, so I'm just going to talk through them one by one. So, wills. Important to consider for a number of reasons. The guardianship of children is included in the will, so that's a massive one. divorce doesn't automatically cancel your existing will, and also it doesn't mean that the will from before you were married comes back into effect. So really making sure that you've got an updated will, make sure it's in place to make sure that your estate is going to be divided up in the way that you want is really, really important. Now, trusts as well, we would see a lot of trust work. So this is something, again, we would speak to a solicitor in a lot of cases. So a trust is a legal arrangement that allows you to set aside assets for specified beneficiaries. And you can put lots of things into a trust. So you can put things like cash, property, and investments. And in relation to trust, people use them as a way of preserving their wealth and their assets and preventing them from getting sent to or passing through to the hands of somebody that they would rather not benefit. And I see a lot of trusts as well being used for inheritance tax purposes. Now, lasting powers of attorney as well. Again, you can get these done with a solicitor, but these are a legal document that allows someone to make financial or well-being decisions for you or act on your behalf if you lose mental capacity. As I said, there's two types. We've got health and well-being and property and financial. And as I said, you can get these done professionally with a solicitor, but you can also do them yourself to save some money. And if you Google government website for making lasting powers of attorney, it will take you straight through the process and the steps that need to be done. So really, really useful. And I've had clients that have done themselves and they've said it's been very straightforward. You will need to register these with the Office of Public Guardian as well once they're completed. So expression of wish forms, and I'm also going to touch a little bit on death and service nomination forms in this as well. So the expression of wish forms, so these relate to pension schemes, and they set out who you would like to receive your pension benefits on your death. It's really important that these are kept up to date. And this is something that I see time and time again, because you might have ex-employer pensions or personal pensions that you took out 10, 20, 30 years ago. And I see it all the time where there's people nominated on these forms that the owner does not want to be on there. So it is actually really easy to change with the pension providers. All you need to do is give them a ring and ask them to send out the form, the latest form that they've got, so you can actually do that. And if you haven't got, or if you don't know who your nominated person is, again, just ring them and ask them to send you a copy of the one that you've completed so you can make sure that it's up to date. Now, for those of you that are an employed role, you might have a death and service benefit. So this is where it covers out a ratio of your salary in the event of death. Now, you also need to check your death and service nomination forms as well, because these will need updating. And again, I do see this time and time again where the people that are on them are not the correct beneficiaries. So next up, we're going to have a look at the protection considerations. So going through a separation or divorce, people often overlook the protection cover that they might need. Now, thinking about protection cover, I've put some of the examples up on the screen. They're all very different products, but they're all offering different solutions. And there's a brief description of each one. Now, this really is the insurance that you never want to have to claim on. And time again, when I sit with people and we talk about, what's important to them, they'll have insurances for dogs, cats, travel, phones, house, you name it, car, but they don't actually have cover in place for themselves or their family. So it is really important that you review this, if you are going through a separation or a divorce. If you have got the cover in place, it's really important, again, to review it, because your circumstances will change and what you have in place might no longer be fit for purpose. So if you're in an employed role, you will have certain benefits via your employment, maybe such as sick pay or death and service cover. Now, if you have these, you need to ask yourself, is that enough cover for your own personal needs? And really the onus is on us as individuals to make sure that we have the right cover in place and relying on employer benefits may be not sufficient. So for things like income protection, you got to think about how long your employer's sick pay will cover you for, and how much it pays. So you could be on statutory sick pay, which is only 90 something pounds a week, or maybe your employer offers 3 months full sick pay and then nothing. So you have to question what happens after that stops. Could you continue to pay your mortgage, your rent, or your bills? Now, another key one for going through divorce and separations are cover for maintenance payments. So what would happen if your spousal or child maintenance stopped? Now, there is a life insurance policy that can be set up on a life of another basis, and this would enable the maintenance payments to continue. So definitely something to speak to your solicitor about if that is something that you are keen to protect. There are all different types of cover to suit all different types of finances, anything from budget cover to comprehensive. So there is something for everybody, but having some cover is better than having no cover at all. And that brings us to the end of that section. So I'm just going to stop now. I've put some kind of considerations up on the screen to have a little think about, some questions to ask yourself. But happy to open it up for Claire if you want to, if there's any Q&As or anything in the chat.
Yeah, I was one of the questions that comes up quite often when I'm talking to people is around this maintenance cover. I think a lot of people don't realise that they can take cover to protect the maintenance payments that they might be getting from their ex-partner.
Yeah.
So how does it work? Who pays the premium? What does it actually do? And do you need the other person's consent in order to cover their life?
Yes. So basically what would happen, you've got, and we'll just use Mr. and Mrs. for this case. Mrs. is receiving a spousal maintenance or a child maintenance. So what we would do is we would look to take out cover, and that can be life cover or it could be critical illness cover on Mr. Mr. would obviously have to agree to that and go through the underwriting process with the provider. But once that's all set in stone, Mr. would be covered, Mrs. would be paying the premiums, and it's done on a life of another basis because there's an insurable interest, and that's why it's allowed.
So what would happen if, let's say that the person whose life is being covered doesn't consent? Is there anything that you can then do? Presumably you can't then cover them if they won't answer the questions on the form or things like that?
Yes, and that's what becomes a bit sticky. And you know, in some of these applications, you might have to have a medical. There's other tests that they might ask for. And some of the times it's straightforward if there's no medical history and it's a relatively straightforward application. It goes straight through. But if there is any history, they will start asking for doctor's reports and maybe, you know, some additional tests and things like that.
If I could just interject, I've had this many times in financial remedy proceedings. So when we obviously reach an agreement as to the finances, if there's a spousal maintenance element, then we can make sure that within the consent order or the final court order, if an agreement can't be reached, the relevant undertakings are in there. So there'll be an undertaking for let's say Mr. or Mrs. to take out life insurance for a certain sum, or critical illness cover, whatever it is, and there'll be an undertaking for them to submit to a medical examination. So that can all be covered off, sealed by the court, and so then they can't then subsequently change their mind. And obviously, if they then don't submit to the medical examination or anything like that, it's enforceable in the court by virtue of your financial remedy order. Sorry, Steph.
Yeah.
Sorry, Claire, just jumped in.
No, that's really helpful. Thank you. And there's a couple of questions actually popped up in the chat about it as well. Just have a quick look. So does the ex benefit from the child maintenance insurance in any way? And does the insurance cover a lapse in payments, or is it just for death or ill health?
No. So because it's done on an insurable interest, and in that scenario that I use, Mrs. is paying the premium. once it's put in place, it can't be cancelled until it's claimed on. So Mr. cannot ever cancel it because it's Mrs. in this instance that's paying the premium and he's been underwritten. And it doesn't cover missed payments. It literally is only for death or critical illness.
Thank you.
Shall I move on?
Yep, I don't think there's any other questions in the boxes. If anything comes up for anybody though, as we go through, just do put it in the Q&A and we can always come back.
Grand,
Thanks, Steph.
So next up, we're going to have a look at savings, investments and emergency funds. So again, I find it's not uncommon for one half of a divorcing couple to have little or no experience when dealing with money, or maybe not know where to start planning now that you've got a financial settlement. So a key consideration to start off with the basics is having an adequate emergency fund in place. So this is where you will have money set aside for unexpected events such as things like boiler breaking, leaky roof, major car fixes. Now, as a rule of thumb, we always say have about 3 times your monthly expenditure set aside. And this has to be in funds that you can easily access as well. So as I said, 3 times monthly expenditure set aside as a good foundation. Now, really important is, again, to consider what financial goals you have, and that's like in the short, medium and longer term. Now, you may have cash assets and you're not sure what to do with them. You may have received a settlement from your divorce and not sure what to do with them. So really trying to think about what do I need to do short term, medium and longer term financially. And I always get asked, well, what's the difference between savings and investments? When should I do one and when should I do the other? So hopefully this will add some clarity to that. So when should you save? So if you've got a short-term goal in mind, like a holiday, a wedding, or even saving for a deposit for a house purchase. So it's an event that you're going to need access to the funds within the first 5 years. Generally, cash savings are more appropriate for goals that are less than 5 years away, because crucially, cash can provide peace of mind that your money suddenly won't fall in value when you need it. So that's, we always say, that kind of 0 to 5 year rule. So when should you consider investing? So this really is about not needing to access the funds for 5 years, and that's a minimum of 5 years. Investing really is about spreading your money across different asset classes, and therefore, it can help your money grow over the longer term. So if you are willing to take risk, which is key when you're investing, and won't need to have access to the funds for at least 5 years, you should consider the investing some of your funds, because over the longer term, the stock markets tend to outperform cash. Now that is, as I said, in the longer term. So when we look at longer term, medium to longer term goals, here's some of the asset classes that you may be able to consider investing some of your money in. Now, some of these you may be already very familiar with. So things like cash, when I say cash, it's things like treasury bills, loans between banks. We've got fixed interest, such as corporate bonds, government bonds. We've got property up there. Sometimes you might hear it known as real estate. So this is always commercial property. It's not residential. And then we've got shares and equities as well. You may also have things like direct shares directly in companies, or maybe alternative investments such as commodities and collectibles. But mixing up each and every one of these and investing into the different asset classes is known as diversification. And this really does help with spreading the risk of an investment. So on the previous slide, we've had a look at the different types of asset classes. Now, these all have varying degrees of risk and returns. And really, you can't have one without the other. They go hand in hand. So with riskier investments, they've got the potential for the bigger losses. But again, there is the opportunity for maybe larger gains, again, medium to longer term. And low risk investments, on the other hand, are seen as safer bets and typically smaller returns. Now, as I said in the last slide, the key really is diversification. So not putting all your eggs in one basket. You should be investing in different asset classes, various different sectors, various different industries, and geographical areas as well. So really spreading the risk on all your investment. This slide, I just want to spend a little time talking about inflation, quite key at the moment, and the effects that this can have on cash savings. So inflation doesn't reduce the monetary value of your capital. It actually reduces the real value because it erodes it over time at the buying power. And that really is evidence from the slide we've got here. You know, in 2001, to have £10,000 in cash, you know, and fast forward 20 years, the buying power of that is just over 6,500. Because as the years go on, the cost of living gets more expensive. So just be mindful of having excess cash sitting in accounts for long periods of time and the impact that this may have. So on this slide, we're going to have a look at compounding and time in the market. So firstly, let's have a look at the compounding. So this really is about money making money, and commonly described, you might have heard it described as interest earned on interest. And this really is about accelerates the growth of your investment over time. The longer that your money is invested, the more time it has to grow, and that is evidenced just from the screenshot there. What you've got is somebody investing at age 25, somebody at age 35, putting the same amount in, £5,000 per annum, with a return of 5% each year. The difference just from that 10-year period is nearly £286,000. So absolutely massive difference in figures. So really, time in the market and compound interest are major factors when investing. For the final slide on this section, I just wanted to cover off a few areas to be mindful of. So married and civil partners receive several tax benefits. So for example, transfer of assets between spouses are effectively exempt from CGT, so that's capital gains tax. Transfers of value between spouses are also exempt from inheritance tax as well, so that's another key one. So timing is really crucial when transferring assets between spouses going through divorce, to minimise the impact of the tax liabilities and separating. Now, when it comes to this side of things, it's really important that you're speaking to your solicitor, that you're speaking to your financial planner, and that you're also speaking to a tax advisor or tax specialist to make sure that you don't get an unnecessary tax bill, because timing really is crucial with this. And that really is covered off all the areas I wanted to talk about in relation to savings, investment, different asset classes, and the type of returns you can get over long periods of time. Any questions on any of that?
So Steph, I was wondering, you talked about different asset classes when you had the chart with the little blobs on.
Mm-hmm.
What's the best performing asset class over the long term in
So
your experience?
If you were to look at long term, it's equities, and then you would follow by property. And when I say again property, that is commercial property, not residential property. And then after that, you'd be looking at bonds and you know, as you go down the scale, but definitely equities for the longer term.
Okay. And a question from the chat. Could you please elaborate on you said that timing was crucial. This is around tax, I think. What do we need to be considering? Or is that more of a legal question? I'm not sure. Perhaps Abigail and Joanna can help as well.
Well, I'll just say something first, and then the ladies can pop in. So basically, if you've got investments, you know, and there's various, you might have investments like an ISA in your own name, but there might be shareholdings, there might be different types of unit trusts. There's lots of different investments that have got tax benefits between spouses. So if you're transferring them between spouses, if that's part of the settlement, and you do it before you get divorced, there is no CGT or capital gains tax to pay with that. Where if you leave it till after you're legally separated, divorced, then that's where the issue comes, because the tax is payable because you're no longer married.
In terms of Abby and I adding anything, I'm going to bow gracefully out of that one, as obviously it's tax advice and that is not within our remit of expertise. We would be turning to somebody like Steph to provide that advice.
But I suppose
Thank
the important thing is for people not to make rash decisions, you know, make sure that you're speaking to, letting your solicitor know, you know, speak to your financial advisor, make sure it's a joined up approach, that everybody's aware of what's happening and that you're not just doing something because you think that's the right thing to do, when actually it might have consequences down the line. And equally, if you're doing things with investments and you're going through divorce, again, you might want to speak to your solicitor, because those items need to be taken into account in Form E's and different things. So you just want to make sure that it's very transparent what you're doing before you do it.
I think one other point that comes up there is that it's really important to have a team around you of different specialists for the different areas that are relevant to you, so that you know you're getting exactly the right advice for your particular situation. And actually, I was thinking as you were talking, Steph, you know, at what sort of point do you get involved working with people who are going through a separation or divorce? Is it right at the beginning, so you can support them through working out what the right level of settlement might be for them, or their kind of best case and worst case scenarios, or do you tend to get involved sort of once that's all agreed?
Personally, I like to get involved as soon as possible, at the very beginning, because as I said earlier, it's very daunting when you're going through a divorce. You know, if you don't work in financial services, there's a lot of jargon that you don't know, you don't understand. Pensions are a minefield. You know, there's so many different regulations, different pensions. So just having an expert that can talk you through what needs to be done, you know, what's beneficial for you, looking at the financial settlement, and you'll see later on in a slide that I'll use about how a financial planner can play out your settlement, so you can visually see, actually, is this sufficient, or, you know, is it not? So definitely, from my viewpoint, as early as possible, just to support throughout the whole process.
I completely agree with you, Steph, and it's, you know, it's getting the experts in as early as possible, because there's going to be tax implications, etc., that potentially you want to take into consideration in any settlement. We obviously want to avoid a situation where a settlement is breached and tax considerations haven't been taken into consideration, and then actually you could be potentially caught with a CGT liability. So I suppose it's appreciating that, yes, we're experts within divorce and separation of finances and kind of the legal implications of that, but it's then recognizing and noticing when we need to bring in somebody like an actuary for pension advice, and bring in somebody like Steph for financial advice, or indeed Claire, to get somebody to provide kind of the practical emotional support of a divorce coach. It's offering that holistic service.
Yeah. Brilliant. I absolutely 100% agree as well. Obviously, you know, I think the more support you can have around you and the more information you can get, the more you can cut through the kind of overwhelm that often comes with going through a divorce, when you've got all these different things to consider. You know, you've got lots of uncertainty around what the future looks like, lots of uncertainty about what your settlement's going to look like, lots of uncertainty perhaps around your children, and all kinds of things. The more people that you can have on board to support you at the right times with the right kind of advice, then the better.
Yeah, absolutely. Okay, so for the next section, we're going to have a look at pensions and some of the benefits. and also about retirement and what kind of pot size that you might need. So it's really important to consider pensions when divorcing, and really pensions can be among one of the most valuable assets going through a divorce. You might need to consider, what size of fund are you going to need for the retirement that you want. And you'll see in a couple of slides time as well, what that pot can look like. And for a lot of people, it's quite a scary figure. So you can see in this slide here, there's various options for splitting pensions, which your solicitor will talk you through. And what I would say is there's various different types of pensions out there. There's defined contributions, defined benefits, maybe SIPs, SASs. And the way of valuing them varies, and that can be very considerably and can be very complex as well. And as Joanna said earlier, you may need to actually get a specialised report from a pension actuary to work out, how to split those. So in relation to keeping track of pensions, so some of you may have lost a pension or can't trace one, so you're going to need to gather that information for your divorce. Now, there is good news on this front. There is a government tracing website and service that you can use. So if you just Google government pension tracing service and follow the instructions, that will take you through what you need to do to find a lost pension. In relation to the state pension entitlement, so you're entitled to full state pension when you've 35 years national insurance contributions. And you can actually get an estimate of this. Again, you'll need to get this for your divorce. And again, good old Google, if you type in BR19 report or check your state pension forecast, that will actually bring up the instructions that you need to follow to be able to gather that information. Now, if you go down that route and you find that actually there are some gaps, you can actually make some voluntary class 3 national insurance contributions to buy some additional pension. And there is a government helpline as well, pensions helpline, that you can call as well. So I just want to touch a little bit about pensions again, because some of you may be used to pensions, you maybe be paying into one for years. You may be in a position now where you actually need to make additional contributions into your pension because of financial settlement, or you might be just literally starting out. So I thought it'd be useful to run through some of the benefits that pensions offer and why to have them as part of your retirement plan. So first up, it's about tax relief. So when you save into a pension, the government gives you a bonus, and that comes in the form of tax relief. So you get 20% as a basic rate taxpayer, you get 40% as a higher rate taxpayer, and 45% as an additional rate taxpayer. So, for example, as a basic rate taxpayer, you contribute £80, the government contributes £20, and £100 goes into your pension, but it's only actually cost you £80. Now, another advantage is getting a tax-free lump sum. So when you retire, which is 25% of your pot. So if you were to retire today and you had a pension of 500,000, you'd be entitled to take the 25% out of the pot tax-free, so you could have £125,000. So if you die before your 75th birthday, in most cases, the pension funds can be paid to your beneficiaries tax-free. Now, that does depend on the pension, but something just to be very aware of, because again, a lot of people are not aware that that actually is the case. And another key thing is that pensions actually sits outside of your estate for inheritance tax purposes. So a lot of positives to consider in relation to pensions. So on this slide, we're going to have a look at 2 key areas. So potential state pension and average spending in retirement. Now, according to which, about 2/3 of people retiring this year are at risk of not having enough savings to give them the income they need in retirement. And that's pretty scary when you think about you've worked most of your life for that and you still haven't got enough in your pot. So the top section of the slide looks at state pension. And this details how much state pension an individual and also a couple can potentially get. Now, what I would say is to remember state pension age is increasing all the time, and that there is going to be no guarantee that we will get it when we retire. And then in the second half of the slide, underneath this looks at the average spending. And the figures given are for a moderate and a comfortable retirement for, again, an individual and a couple. And just to put it into some context about what I mean when I talk about moderate or comfortable. So a moderate retirement is maybe 1 to 2 short haul holidays a year, eaten out a couple of times a month. And a more comfortable retirement is extended holidays, maybe long haul holidays, gym memberships, health club memberships, expensive meals out, or changing the car every 5 years. In both cases, the average state pension is nowhere near what is needed for a moderate or a comfortable retirement. So this really just highlights the need to make sure that you are planning and to make sure that you're saving as much as possible, as we don't have, we shouldn't have to rely on having that state pension just in case there isn't one. So I often get asked about how much of a pot you need to retire. So I'm hoping, again, this will add some clarity. If you're reviewing your pensions as part of the divorce settlement, and having to think about what pot size you might need later on in life. Now that really depends on the type of retirement that you're looking for. We've had a look in the previous slide about the annual expenditure and the different types of retirement. But as a general rule of thumb to determine what you might need is to multiply the estimated income that you require by 25. So for a moderate retirement, that would be £20,000 per annum. You would be looking at having the pot size there of £500,000. And research by Fidelity that I've recently read has said that most people will need about 55 to 80% of their pre-retirement income to live off after they retire. But it will be different for everybody. Now, for many people, they're not just going to be able to rely on pensions, giving them the income that they retire or that they need. So we're seeing more and more people now having to rely on property, and this can be done in various ways, which are listed on the slide. Like it can be done depending on whether you just have a main residence or whether you have a property portfolio. There's different methods of extracting income from the properties. Now, some of these or all of these will have their own advantages and disadvantages. Different, providers will offer different solutions. What I would say, if you are going down this route, you really do need to seek a professional that is qualified within this area to make sure that the advice that's been given is tailored to your specific needs, that it is suitable, and that there's no other areas that you could rely on, and just really make sure that it is right, because once you go down this route, sometimes this can affect inheritance for children and things like that longer term. So as I said, there'll be advantages and disadvantages. Make sure that you speak to somebody qualified within this area if it is something that you want to consider. And that's it for that section then, covering off the retirement planning side of things. I've put some questions again to consider. Any questions?
So many questions, Steph. So when you work with a client who is moving through a separation and divorce, does your relationship then often continue way beyond the divorce, so that you then perhaps have annual reviews and all that kind of thing, so you build an ongoing relationship with people that lasts beyond the initial advice that they might need about their settlement and what that might look like?
Yeah, so that's key. helping them through the divorce is one element. I always say to clients, I'm around for the long term. This is not just putting all this into place and not seeing me again. As you said, we do annual reviews. Clients have got my door's open. They can contact me at any point throughout the year. And people will have different life events happening, changing circumstances. And it's really important that they pick up the phone or drop me an email to let me know about that, because we might need to reconsider, what we put in place. Is there changes we need to make? Is there anything else on the horizon that we need to plan for? So definitely really important to have that relationship after the settlement and everything else has been done and finalised.
And as you're advising, one thing that came into my mind, it's not something that you've particularly looked at in this, but I wondered if you have, if you've got children, say, who are coming up to sort of university type age and things like that, are there things that you can do in terms of helping people plan for how they might support their children to perhaps fund their way through university and things like that?
Yeah. So if they're at university, you kind of, because you're not going to start investing when they're at university. It's about having the conversation, because we would look at a client's full personal and financial position. One of the questions we would have if they had kids, is, what are your plans? Do we need to make any provisions? Would you like to plan for university? Or if they don't go to university, would you like to be able to give them a deposit for the house? Understanding what the client wants in the short term, in the medium term, and the longer term is really important, and making sure that, adequate plans are put in place. And, we've a lot of clients that will do school fee planning, they'll do university planning as well. So, all clients are very unique. They've got very unique circumstances, all very different. And I suppose that's one of the things I love about what I do, because every day is different.
Yeah, it sounds as though one of the conversations you probably have with a lot of your clients is around the kind of purpose that they want their money, their investments, their funds to go towards.
Yeah.
Kind of purpose driven.
Yeah.
Is that right?
It is. And sometimes what I find is when people start speaking to a financial planner, this is alien to people because they've never done it before, and they don't really know where to start. And that's my job, to make it simple and straightforward and not daunting. And for some people, it's the first time you'd ever have a conversation with them. For most people, when you say, what do you want to do when you retire, most people haven't got a clue. It's 20, 30 years away. They can't even think. But by asking, that's where my skill set comes in, because that's what we need to plan for. We need to know what the end goal is, so that we can make sure that we're actually on route to achieve that. So yeah, it is very much looking at all the different areas and making sure that, there's a plan in place to make them happen.
Yeah. And so would you, when you're working with a client, would you look at sort of different forecasts depending on different outcomes, and so that you can identify perhaps gaps and things like that? Because I know from working with my clients, one of the big fears is, I won't have enough money to do what I want to do, and so on. I always say to them, speak to a financial planner, ask your financial planner to show you sort of cash flow forecasts, to show you what will this fund look like when I'm 50, what will it look like when I'm 60, what will it look like when I'm 70, what will it look like if I take some out to do this, what will it look like if I make a different decision, and all the different variables. Is that something that you do as well?
Well, yes, and anyone would think that we'd rehearse this, because actually the next bit is
sorry.
It is about the
nicely segueing in.
But yes, 100%. We use cash flow modeling for clients going through divorce, but we use it with all our clients to do that exact exercise, because things will change. For most people, there are going to be gaps, but it's understanding the gaps, and then it's understanding, well, actually, what's the priority? What do I need to do? What are the changes I need to make to plug that gap? And that is, working with somebody like me that will enable people to, realize that there is a plan. We can make this work if we make certain tweaks to certain things. Any other questions?
I don't think there's anything in the chat at the moment. No.
And then finally, as I was just saying a moment ago, cash flow modeling. So why is it important in divorce? So the benefit of cash flow analysis on divorce, it can really help paint a picture very, very quickly and help with seeing how a settlement might work, or equally, in this case, how it wasn't going to work. It can tell us how long your spending is sustainable, is it going to run out, and it can help determine where to take an income from. So there's lots of different variables. This is just touching the surface with this type of software. As I said, it's a really good tool for some people, depending on if it's right for them going through divorce, but equally post-divorce, a really, really beneficial tool to make sure that we're using it to stay on track. So definitely something to be considered for all current positions. And that was everything.
Steph, on that previous slide,
Mm-hmm.
are you able to go back? Could you give us a little bit of explanation in terms of what all the different colours mean? And
so all the different colours will so say that the dark navy would be a state pension. All the colours will detail on the actual cash flow model. It is a lot more detail. I just wanted to keep it quite basic for this. But you would see, so the orange would be pension. So
Right.
each different asset or each different area would have a different color. So you can see how that plays into the overall picture for the client. You can, you could have buy-to-let income, you could have, rental income, all those different areas that you would have an income, you can put into this, as well as your expenditure, and then forecast forward. If you're just starting to pay into a pension, if you've been paying in, to a pension for a long time, we put all of that into it, and we fast forward to retirement age to see actually what does that look like. Or if we're school fee planning, university planning, we can do all that via this software as well. So it really is a clever piece of kit, and very visual, and clients love that, because you can, as soon as you see red in one of these graphs, you know that we've got a little bit of a mountain to climb or a little hill to climb. So
thank you. I mean, just from my own personal experience, having got divorced again for last year for the second time, I've been through this exercise myself, and it's really useful to be able to see, okay, well, this is what this is going to look like when I'm 65, and I can work out how much longer I need to be running my business for. I can work out how much, to try and aim for. I can work out where there was a little gap on mine between, I can't remember exactly what ages it was, but I might need to sort of wind my business down more slowly than just stopping. It's really useful to be able to start thinking, these are the ways that I can work around some of those gaps. Because I know it can be really scary thinking that there might be a gap. It's always better to know what the gap is, so that you can think about how to fill it, and you can start to think about different options and choices, rather than being stuck in a place of being scared of what's actually something that's unknown. So I found the whole thing really, really helpful to be able to see that kind of in a picture, to see where the gaps might arise.
And also they're really helpful when you are negotiating your financial settlement as well within a divorce. So if you've got two offers, say for example the proposal that we're putting forward and why this would meet your needs, we could have a correlating graph showing why it meets your needs, and against say the proposal that we received from the other party, and then we can clearly highlight the shortfalls. And so that helps kind of from a negotiating perspective in terms of your final agreement, but also when you're considering things like interim maintenance and what you need to be able to just keep the family, the outgoings on the family home paid and the mortgage paid until you've reached a financial agreement, inputting your information about what you receive from all of your income sources. So, wages, benefits, child maintenance, etc., seeing what your outgoings are and easily being able to highlight the deficits, and making it as easy as the judge as to possible to enable the judge to see, oh well, clearly look at that red, there's a deficit, we need X from husband to turn that green, for example.
Yeah, thank you, that's really helpful as well. If some of the people listening are thinking, okay, well my funds are more limited perhaps than some of the examples that you've shown, what's the best thing for you if you're in that situation to focus on? Is it to focus on savings, or is it to focus on investment, or is it to focus on putting as much as you can into your pension? What would be the best way if you're on limited funds?
Again, it all depends on the client, because when they need access to the money. So say, if you looked at because once you put the money into the pension, that's it. It's into the minimum of 57 from 2028. So it's locked in. So that's why sometimes clients will start saving into the ISAs, because they've got access to them. But they're two very different tax wrappers. You don't get the tax relief that you get with a pension going into an ISA. So that's why it's really important to speak to somebody that has got the knowledge to help you make the right decision, and make sure then that just because it's the right decision now, to check in, annually to make sure that that's still right, because just because you did something 3 years ago or 4 years ago, your position will change, your circumstances will have changed. And in some cases, it might be a case if you actually start doing both of them, so it doesn't have to be a case of one or the other. You can start off maybe doing both, and your financial planner can play that out and show you actually what does that mean in reality for you.
Yeah, thank you. Just on something that you were just saying, you were saying that in 2028 the minimum age you can take your pension is going to be 57.
Yeah.
What age is it now? So until then
you can take, so this is more for the defined contribution type schemes, so you can take your pension from age 55. Now, you'd have to quite a significant amount in the pension, because if you think about it, the pension has got to last into your 80s. So that's a long time for, to have a pension in retirement. So, we generally don't see people taking pensions at 55. A lot of people are having to work later on in life into their, the retiring at 60s. Again, that's gone. People are looking to more at 65. A lot of people are now looking at blended kind of retirement. So instead of doing 5 days a week, doing 3 days a week and reducing it that way. So it just, it all depends on the individual, but that's, again, this software plays all that out. When I sit down with clients, we look at actually, this is 60, and this is 65, is there a happy medium in between that? And what can we do to get you to where you're comfortable with?
The key is getting the information, isn't it? Getting knowledge is power, isn't it?
Yeah.
So, getting the information that you need so that you can make really, really good, clear, informed decisions, both about the settlement that you're negotiating, but also about what you're going to do with that once you've got it and you're able to invest it or put it where the best place is.
Yeah, definitely.
Yeah. Are there any other questions that anybody would like to ask before we finish? Don't think there's anything else coming up. And somebody has asked, is there somewhere that you can find this analysis template? Is that the graph? I think that might be the graph that people are talking. Is there a template online that people can find that? I think it's probably a specialist.
It's a specialist it's a specialist software that that I subscribe monthly to it, so it's not something that we could just pull off the internet.
Yeah, okay. So the message really is, you know, see a financial advisor, get that information, and from somebody who's specialist and is able to advise you accordingly. If there aren't any other questions, is there anything else that you'd like to add, Joanna or Abigail, to anything that you've heard, or just to finish?
I suppose I think the only other thing that I would add is obviously talking about the conversations that some of Steph's clients have with her about saving up for things to help your, whether it's helping your children, for example, to get a property, and then obviously providing them with a deposit, etc., is to just kind of think outside the box of other ways to protect that once the money has left kind of your accounts and has gone to your children. So cohabitation agreements, etc., just to make sure that it's clear that if you obviously, if your child is unmarried and moving into a property with a partner, just to make sure that there's a document in place to ensure that that deposit is protected in the event of the relationship breaking down. And also, you know, if you do spend some time and you have built up these assets, you know, pensions, savings, ISAs, investments, whatever it may be, if you are going to be going to get married or remarried, and think about the possibility of putting in place a prenup, etc., to kind of protect these assets as far as possible, because there's one thing having them, and there's another thing kind of keeping them, you know, as you move forward, and just kind of taking those sensible steps. I appreciate a prenup doesn't sound particularly romantic, but it's practical. So yeah, just perhaps other considerations. Ooh, Claire, I think you're on mute. Either that or my sound's gone.
No, I was on mute. Thank you very much.
Okay.
So I put myself on mute because my dog looked like he might bark. So I thought, quickly put myself on mute. I just wanted to say thank you to Stephanie for all of that. I mean, a huge amount of information there. The recording will be going out afterwards. So if there was anything that you want a bit more clarity on, or you want to watch through again, you'll be able to do that. So yeah, again, thank you ever so much. There was a huge amount of information there. I mean, I've written loads of notes myself as well. Thank you. It was really, really helpful. And thank you as well to Miguel and Joanna for coming along. And
You're welcome.
thank you to Stowe.